Hello and welcome to Colombia Threadneedle Investments. The close referendum to leave the EU has continued to be the main focus of the European investment world. The ramifications will be felt for some time. So where are there opportunities elsewhere in the world? Now I'm here with William Davies to find out more. Good afternoon, William.
Good afternoon.
So William, we have a lot to get through. What are the immediate impacts of the recent referendum?
Well, the immediate impact of the recent vote has been one of volatility within markets. It's led to a weaker sterling, equity markets coming off, although there has been an element of recovery there as well, but certainly volatility between different sectors within the market.
And what is Colombia Threadneedle Investments' current position following the news?
Well, following the news, we have to be aware that there's likely to be lower economic growth as we move forward. The most impacted country is likely to be the UK, but we also look at Europe as well, and the European Union countries will also be impacted because growth there will be less as we move forward. So we need to bear that in mind in terms of investment opportunities. As we look elsewhere around the world, we would look at the US, and it probably won't be impacted enormously. Asia and Japan similarly shouldn't be impacted enormously, but what we must not forget, currencies have moved significantly. Sterling has weakened, the euro has weakened against the dollar as well, and that creates opportunities as well as difficulties. So for some of the exporters, they're in a better position now than they were previously.
So moving on to the opportunities following everything that's happened, there's been a lot of volatility, but where do you see opportunity right now?
Well, the opportunity right now, as we move forward, we continue to believe we're going to be in a lowish growth environment. We're going to be in a lowish inflationary environment, although maybe inflation will be a bit higher in the UK, given the weakness of sterling. And with that, interest rates are going to be low. So let's look at the US. We were expecting interest rates may rise at the end of this year by 0.25% or so. That's less likely to occur right now. So this low growth, low inflation, low interest rate environment, which will favour companies which can generate their own sales growth, their own profits growth. Those are going to be the areas which we believe are going to benefit most as we move forward.
So William, what trends are you seeing elsewhere?
Trends around the world are quite interesting because there's been volatility, as we have spoken about, within exchange rates. So weakness of sterling, strength of the dollar. That creates opportunities for exporters in the weaker currency areas like the UK, and challenges for some of those companies in the stronger currency areas. But if we look at the types of companies that benefit, those which are more dependent upon a stronger economy, a recovering economy, those are the types of companies which will struggle more within this environment. So those are the trends which we've been seeing within markets and we'd expect to continue to see, whereas those companies that can continue to generate their own growth, they're going to be the net beneficiaries as we move forward.
So then if we are looking at sectors like technology and e-commerce, do you see an opportunity for growth there?
Absolutely. I mean, this is just the type of sector where we can find companies which generate their own growth, which generate improving profits as we move forward and continue to generate improving returns for shareholders. Because if we look at those top technology companies, some of the gorillas around the world, maybe I shouldn't call Amazon a gorilla or Facebook a gorilla, but these are the largest companies within their fields. They're continuing to grow their top line. They're continuing to grow profits. These companies ought to trade expensive in an environment where growth is tough to find, where interest rates are low, and these are exactly the types of companies which are going to benefit as we move forward. So yes, absolutely, there are areas of the market which will benefit from this type of environment, and these are the types of area which we think that we ought to concentrate upon within portfolios and obviously take advantage of that.
Yeah.
There are other areas where it's more difficult. Those are companies which may be benefiting from an accelerating economy, some of the more cyclical or economy sensitive areas. It's going to be more difficult for these companies in an environment of lowish growth. So these are the areas where we would tend to underweight or have less representation, and those areas where we see that real growth coming through, like technology, like e-commerce, as you mentioned, these are the areas where we will be overweight, have a bigger representation within portfolios.
Thank you very much for your time, William, And thank you again for watching. We'll be back again next month.